If you want to own something that earns a passive income and doesn't involve trying to beat the market, then you need to know about dividend investing. Hey guys, I'm Jasper, a financial market analyst working with Trading 212 to improve your financial education. A very nice lad came up to me at an investment seminar I was speaking at, and do you know what he said? I've just started investing, so I'm avoiding dividends until I get some more experience. When I heard him say that, it really inspired me to make this video because dividend investing, in my humble opinion, is something all investors should consider, whether new or experienced. So if you're new to investing like my friend at the seminar, or have done some investing but so far not considered dividends, I'm hopeful that this video can offer some real value. Specifically, by watching this video, you're going to learn the goal of dividend investing, i.e. why is dividend investing something you'd even consider putting your hard-earned money into in the first place? What is a dividend? The pros and cons of dividend investing, and an example dividend stock you could go out and buy today. First of all, the goal is not to find the next rocket ship stock headed for the moon. Though that can happen, it's not by design. There are basically two objectives for dividend investing: earning a passive income and growing your wealth for the long term. Both of which I think we could agree would be very nice to achieve. The one you're more focused on would often depend on your age, but it's all done by investing your money into strong, reliable companies that raise the amount they pay to shareholders as dividends over time. Now I'm going to come back to how we go about achieving those two objectives, but I think it would be better if I rewind for a second to address an important question. What is a dividend? Dividends exist so that companies can share the profits among their owners. And it's not just giant multinational companies that use dividends, small business owners use the same method. So instead of paying themselves a salary that probably comes with a large tax bill, they will pay themselves a dividend from the profits. A dividend is cash, or sometimes shares, that a company will pay to shareholders on a regular basis just for owning the shares. The money will be sent to your brokerage account, like Trading 212, without you having to do anything. You'll have made money by literally doing nothing. You don't even need to have sold any shares. So now, returning to our two objectives, how do we use this cash that these companies are sending us to earn a passive income? Well, we can simply withdraw the dividends as cash and spend it. Pretty simple, right? A slightly more complex idea is how we best use the dividends to grow our wealth for the long term. So instead of taking the cash out as an income, we reinvest the dividends. That means we use the cash to buy more shares. Then, by owning more shares, we earn even bigger dividends. Then we reinvest those bigger dividends and make even bigger dividends. This process is known as compounding returns. Albert Einstein described compound interest as the eighth wonder of the world. Alright, no, he actually didn't say that, but still, it's a good quote. You can compare the historical earnings made when taking out the dividends or reinvesting them in this chart. What's really mad is how much steeper the line gets, i.e. how much more money you make in later years, thanks to the compounding. Alright, so dividend stocks are perfect in every way, right? Clearly not. Let's talk about the pros and the cons, or as I like to say, the good, the bad, and the ugly of dividend investing. The good. Being paid a dividend is one of the simplest forms of passive income. If you compare it to all the hoops you have to jump through when, for example, buying a rental property, there's just no comparison in terms of simplicity. You're investing in larger blue chip companies, which means they've been in business typically for decades, and that makes it one of the least risky forms of investing. You can live off the income from your portfolio, but it takes a lot of money and usually a lot of time to earn the money to do that. Thankfully, compounding returns means investing even a small amount of money could lead to big long-term gains. And dividend payouts from top companies will tend to rise faster than general prices, offering you protection against inflation. The bad. We're not talking about, as Americans would say, home runs here. Stock prices of dividend-paying companies will often travel in the same sideways range for years. So again, if you're looking for a quick buck, this is just not the way to go. Remember, anytime you make any investment, your money is at risk. So if there is a downturn in the overall stock market, blue chip stocks that pay dividends will usually go down less than the broader market, but they will most likely still go down, bringing your account balance down with them. The ugly. Dividends aren't guaranteed to stay the same. There's no obligation for a company to keep the dividend, and when times are tough, companies will cut the dividend to save money, and in doing so, cut the source of your passive income. Now, all that being said, let's talk about some specific dividend stocks you could go out and buy right now. When it comes to dividend investing, there is a lot less speculation than something like investing in high growth stocks or day trading. We're not trying to predict which way the stock price is going to go. What we're trying to do is find companies that are most likely to consistently pay their dividend. There's nothing wrong, in my opinion, with using pre-existing lists of the most popular dividend stocks as your starting point. I can even pull up my Trading 212 app, and when I tap the search icon as an alternative to typing the name of the company or the stock ticker symbol just beneath, there are some categories of stocks you can buy. If I tap dividends, then it shows a list of well-known dividend-paying stocks. Scrolling through, you can see that this is pretty much all household names. And that's the point. In all likelihood, these companies aren't going anywhere. The top of the list, because it's alphabetical order, is AT&T. I'm picking this stock at random, but actually it's a pretty perfect example. This company was founded in 1885 by Alexander Graham Bell, the inventor of the telephone, and it's still going today. So what can we firstly observe? Well, the price chart shows us the stock has fallen over the past year. Oh dear, you might be thinking. But seriously, oh dear about what? AT&T goes out of business after 137 years, the year you decide to invest? It's a possibility, but I'd suggest it's unlikely. Is this a dip to buy, or will this downtrend continue? It actually doesn't really matter. Remember, we're doing this for the long haul to achieve passive income and build wealth through the dividend. All right, if I scroll further down, this is all important information. You really do need to get familiar with the companies that you're investing in, and that's not just for the impressive dinner party conversations. The better you know a company, the more confidence you'll have to hold on to the stock and reap the rewards of being a long-term shareholder. But as a dividend investor, the key statistic is this one: the dividend yield. This is the amount you'll get paid per year as a percentage of your initial investment. Let's say you bought $1,000 worth of AT&T stock and the dividend yield is 8.64%, you'll make $86.40 in dividend income for the year. Now we know the company has longevity and what the dividend yield is. The last really important bit of information is the consistency in paying the dividends. If I look under all ratios, then scroll to valuations, then take a look at dividend yield category, you can see that the 5-year average is 6.36%, so the dividend has been consistently good and the yield is going up. Of course, AT&T was just the top of the list alphabetically on the Trading 212 app. There are other stocks on this list, and there are other lists that you can use to get ideas for stocks to invest in. I use the stock screeners on TradingView and Yahoo Finance, and there's some great analysis of dividend stocks on sites like Motley Fool and CNBC. Right, let's recap. We just talked about the goals behind dividend investing, what dividends are, the good, the bad, the ugly, and an example of a dividend paying stock. If you've got any dividend stocks that you're thinking about investing in, or maybe you already have invested in, please do share the ticker symbol and all your thoughts with the 860,000 Trading 212 YouTube subscribers by leaving a comment. And if you like this video, please make sure to smash the like button, hit subscribe, and hit the bell icon so you get more videos like these as soon as they're released. Thank you very much for watching, and happy investing.